Welcome and thank you everybody for joining us today. Today's webinar is a collaborative effort with Agudah and Roth & Co. My name is Shlomo Soroka. I serve as the Director of Government Affairs for Agudah Israel of Illinois. And we have with us on the line today Aaron Golding. Aaron is a tax controversy attorney at Roth & Co. He's based out of the firm's New York office, where you can see him right now. And he has been with Roth & Co. for 5 years now and has been practicing tax law for 10 years. He uses his unique background in accounting, tax, and law to help individuals and businesses resolve tax controversies with the IRS. In short, Aaron is a tax lawyer renowned for saving his clients lots of money. So unless you like paying more in taxes, you may want to contact him after this webinar. And he's here to talk with us about the new COVID relief bill. Also on the line with us today is Rabbi Abba Cohen. Abba is also an attorney based out of Washington, D.C. He serves as the Vice President for Government Affairs and Washington Director and Counsel at Agudah Israel of America. Towards the goals of his office, Rabbi Cohen works extensively with the White House and executive agencies and Congress. As one of Washington's most seasoned and respected faith advocates, he has assumed a prominent role in a number of landmark legislative and regulatory activities and achievements that have worked to the profound benefit of the Jewish community as a whole and the Orthodox community in particular, as well as society at large. Rabbi Cohen will start us off with some background information and an insider's perspective on the bill and what we can expect down the line. Just before we go to Rabbi Cohen, a quick word on some Q&As. We have a lot of content. I don't know how we're going to get through everything, but we have a lot that we need to share with you today. So most likely we will not have time to go through too many questions. Nonetheless, please feel free to make use of the Q&A function below, because if we don't get to your question today, we will do our best to respond in our email recap after the meeting. And with that, I'm going to pass the virtual mic to Rabbi Cohen.
Okay. Thank you very much, Rabbi Soroka. And it's a great pleasure to be here once again with Roth & Co. To provide the public with some very important information that affects the lives of literally everyone in our society. I think my job here is to convey the setting and the atmosphere that the CARES Act, the new CARES Act, was passed. It's always important to know the outside factors that affect what goes into a bill. And everyone knows that the CARES Act, starting back in March and continuing through today, was unprecedented. It was unprecedented in both size and scope. It was an emergency bill. We were dealing with a medical pandemic, the likes of which we haven't seen I don't know if in the history of the nation. And it was because of that, it was very open-ended. We had a lot of questions. There were many unknowns affecting everybody in many different ways. And if you look at the chronology of the bill, it was passed, the first CARES Act was passed at the end of March. And that left us with many questions and many doubts and many contradictions, because so much of it broke new ground. And because of that, it resulted in a few small bills being passed immediately afterwards, then guidance after guidance after guidance from the various agencies that were responsible for administering the bill. And even in some cases, it resulted in litigation. And shortly after, I think it was after, it was clearly after the passage of the first CARES Act, but I think it probably was in May, the House passed its version of the second CARES Act, which was called the HEROES Act. And then after the HEROES Act, there was a long lull in COVID stimulus and COVID relief legislation. Of course, we were all working on it. We were working on it day to day. But in terms of urgency, in terms of activity, there was a long lull after the first CARES Act even after the second version was passed in the House called the HEROES Act. And then we got into election season. Of course, you know, election season, politics takes over everything, and it became part of the election. But then after the election was done, we were rushing again. I mean, the first CARES Act, they rushed to pass a bill, and which is one of the reasons why we were left with so many questions. And then there was this long lull, and then after the election came by, we were in rushing mode again, and that was complicated by on again and off again kinds of negotiations. And then there were other bills that surfaced, including the bipartisan bill, and there was a tremendous amount of secrecy about what was going on, what the negotiations were about, which bills were being used to craft the final bill. And there was a tremendous amount of secrecy about specific language. And I think that's another thing. I mean, I think that, you know, the unprecedented nature of this whole effort was something that factored very much into it. And I think the rush factored into it, and then the election factored into it, and then the secrecy factored into it. And then perhaps most interesting of all is the fact that all of this that was done by Zoom, and all the advocacy that was done by Zoom or by conference call, on such an incredibly massive bill with such great implications. We were all the advocates that were working on the bill, whether it was talking to the administration or whether it was talking to congressional leaders or their offices, or whether we were talking with various interest groups, whether it was, you know, we work with other nonprofits, we work with religious organizations, we work with school groups. Everybody was communicating and talking about language over Zoom, not around the table like we usually do. So, you know, all of this figured in terms of how long the bill took, what the final bill looks like, and what things will be left for the future. And I think what we all saw was the extraordinary fragility of this bill. It was extremely fragile, so that, you know, you could push for certain things, and you advocate on behalf of certain items and causes, but you had to be very, very careful about how to do that and when to do that, because you didn't want anything to bring the bill down. And there were things that a lot of people worked on, and if they would have pushed too hard, if they would have pushed the wrong way, it could very well have brought the bill down. And it's scary to think what would have happened in that case. So I want to talk about just a few things that we had worked on. I think they're, you know, I'm a Jewish advocate, so these things were of interest to the Jewish community, but they affected everybody. And the first thing I wanted to talk about, which I see is on the agenda, is the direct payments, the stimulus checks. And we've worked on them. We were supportive of them because they're very helpful to families. We're generally supportive of higher payments. Now, we weren't, so, you know, then, you know, this has become very controversial lately about the $600 versus $2,000. So, you know, we weren't supporting any particular payment that would be a poison pill. And I'm not saying that we specifically would support 2,000 and we wouldn't support 1,000, or we wouldn't support 600. But generally, we support payments to families because they help families. But the key thing in this particular bill, I think, is that how the bill treats children. On the most simple level, the benefit for children went from $500 to $600. But in general, there's nothing in the bill that provides or places a cap on family size, or the number of children that can receive the benefit. I mean, once you're in the categories that make you eligible for a benefit, I think that it's very important that, and I know it's been an Agudah Israel priority to to take into account, not to take into account family size. Don't put a family at a disadvantage because of the number of children they have. In fact, whether it's tax legislation or financial benefits, financial assistance, we always say don't just look at income, but look at income plus family size and other relevant factors for the benefits that are being offered. The second thing I wanted to mention was PPP itself, which is an item on the agenda. Again, PPP is very helpful, has been very helpful to businesses and families, employers, employees. And early on, we pursued a second round. Early on, we wanted to see a second round of the PPP. And we also pushed already in the first round, but certainly in the second round, that faith-based nonprofits should be eligible for PPP assistance. But one thing that remained problematic for us, and that was there are a number of entities in our community, I would call them mid-size, because the original PP was eligible only for entities that were up to 500 employees. But we have entities that are mid-size and they're worthy and they're hurting, but they weren't eligible. So we tried to raise the cap of mid-size entities eligible to receive PPP. At the same time, and by the way, we were successful. The House bill eliminated the cap, so we were successful on the House side in taking it away. At the same time, there was a lot of emphasis on small entities, because small entities, and we heard this from in our own community as well, small entities were thought to be at a disadvantage. Practically speaking, it seemed that the small entities were being disadvantaged by being put at the back of the line, and that because priority was given to the larger entities. So we were sympathetic with a bill that targeted small entities, and it was sort of we had to make this choice. I mean, do we push the mid-size or do we go with the small entities? In the end, as you know, the bill places a 300-person limit, employee limit on the PPP, and we will just continue in the future working on legislation that will accommodate the larger mid-size entities. The next thing I wanted to talk about is the charitable deduction. You know that under the tax bill that was passed a few years ago, when they raised the standard deduction, it was looked at as taking away some incentive for charitable giving, and in fact, studies have shown that it is indeed done that. That charitable giving has gone down because of the charitable deduction, and we have been fighting. We and other nonprofits have been fighting all along to reinstate, in a favorable way, the charitable deduction, and the first CARES Act reestablished that incentive for non-itemizers. And what it established was, if you give a charitable deduction, if you give a charitable contribution, you can get a deduction, but there was a $300 cap for individuals and joint filers, $300 cap. We had supported proposals that provided a $600 cap to individuals and a $1,200 cap for joint filers, and even legislation that put those numbers at 4,000 for individuals and 8,000 for joints, because we know that how important charitable giving it is for the work of our nonprofits, and for their ability to address the needs of the community. But in the end, this bill passed with continuing the $300 individual, $300 cap for individual filers, but it doubled the cap for joint filers. And then it extended it through the year 2021. So again, it's another example of, we were having problems with it. We had to make tough decisions. Where do we draw the line, and where do we stop making our case and look forward? And finally, and I'll just go through this quickly, I'll say it because I think probably there are people on the webinar that have a particular interest in education, and particularly private education. This bill provides $2.7 billion set aside for private schools. to set aside for private schools, that's a considerable amount of money. But what's important to remember is, for those of us who went through the process and went through the different proposals, we could have ended up, we meaning the private school community, could have ended up with nothing, zero, in this COVID relief package. And in fact, the HEROES Act provided nothing to private schools, or we could have been provided with very little. In other words, we could have followed the example of the first CARES Act, which placed certain restrictions on the funds going to private schools, and we have found that that has provided us very little in terms of real aid. At the same time, there was a proposal, a Republican proposal that was put forth by Senator McConnell, which not only included funds for private schools, but it had provisions in there for school choice, which is very good, and very good for those of us who are supporters of school choice. They put provisions in there saying that this aid wasn't going to be federal financial aid.
I'm sorry to interrupt. Just to your point about making sure that the private schools got their fair share. I want to make sure that Aaron gets his fair share of time, and all the people that are.
Okay, so I'm finishing in 1 second, and I just wanted to point out that these were tough decisions, but we decided to go with the 2.75 billion because it would bring the most relief to our schools. And in terms of the other issues that it could have included, our attitude is that this is an emergency bill, and we'll continue to work on all these issues that I just said: direct payment, PPP, charitable deductions, and all these other bills as future legislation and future regulatory action comes down the pike. And with that, as we say in our business, I'm going to yield my time to Mr. Goldie.
Thank you very much, Rabbi Cohen. I very much appreciate your introduction and for your advocacy. So I am glad to be back. It's very gratifying to travel around the country, and people come up to me and they say, "Hey, I recognize you from the PPP webinars," and they appreciate some level of clarity that it's given to them in a very confusing process. So thank you for that, and thank you for attending. What I'd like to do is discuss over 5,500 pages of legislation and sort of boil it down into 40 minutes if I can. Obviously, there are a lot of details, and there are a lot of things which the SBA will be giving guidance for, that we look for. So what I'd like to do is share with you some highlights of what we know, what action items, what things you could do now, and what might be relevant for you. It's my understanding, I would guess, that many of you today came to hear about PPP too, because PPP is the big thing that gets a lot of press. And you meet everybody on the street and they say, "Oh, did you hear there's a new PPP?" What I would just ask is save some of your focus energy for when we talk about the employee retention tax credit, because that might actually be more relevant and more beneficial for your business and organization. So
I know we'll also be talking about
think about. Yes.
Sick and family leave, tax credits, unemployment, stimulus checks. There's a lot to get to, but now that you brought it up, let's begin talking about PPP. Can you share with us some of the highlights and maybe some of the differences between PPP2 and PPP1?
Sure. There really aren't that many differences, other than there are more borrower-friendly, more business-friendly rules and regulations with regards to it. So in terms of if you got a PPP loan, you're able to get another one. Even if you didn't get one before, you're still eligible for a new PPP loan. One of the big differences that they clarified in this law is that the expenses are now deductible.
So that even if my payroll expenses that I used PPP1 for PPP 1 for, that's still a deductible expense, correct?
Exactly, exactly. That's an extremely important point because to give an example, if my business received a $500,000 PPP loan so that I could pay my employees, and I paid my employees that $500,000, I spent it all on payroll. So before this law was signed, the IRS was saying that those expenses, that $500,000 in payroll, that's not deductible on your business return because that's going to be forgiven. And Congress has clarified in this law that even though you're getting a forgivable loan, which what amounts to be a grant, not only is it not income to the business, but you could also use those expenses, which is just a tremendous benefit to businesses and very important to realize. One of the other highlights, I think, for a lot of people, those people that have smaller type loans that are under $150,000, there probably wasn't a day in the summer that I did not receive calls and emails asking, is there going to be automatic forgiveness for less than 150,000? So we're not at automatic forgiveness, but we're about as close as we can get to that. The SBA is ordered to come out with a one-page forgiveness form for loans of $150,000 or less without much information or documentation required. So just makes things a lot easier.
Is that also for the first PPP?
Yes. Yes, it is. Extremely important. So, very often people want to know, should I apply? Should I apply for forgiveness? And many people have applied for forgiveness. But if you are under $150,000, I would recommend waiting until we get this new form because it might make things a lot easier. We'll jump right into the PPP round 2 details because it's a little bit different in that the number of employees that you're allowed to have are only 300. So in other words, instead of in the old PPP it being 500, you have to have 300 employees or less in order to qualify for this new round, this second draw of PPP.
Now, is that 300 for my entire business, or is that per location?
That's a great question. The answer is, for most people, for most of us, most businesses, it's going to be total. But if there is a business that is in the hospitality industry, the hotels, the restaurants, those types of businesses, Congress wanted to give them, not only did they get more money on the loan, which we'll speak about soon, they also have the option, they could also say it's 300 per location for those businesses. So the other big ticket item, the other big issue in order to qualify for PPP2 is because they wanted to target businesses that were specifically hurt during the pandemic. So therefore, they said that businesses are only eligible for PPP2 for the second draw in a situation where they had a 25% reduction in gross receipts. So money coming in had to go down by 25%, and you basically, it's in any quarter of 2020 versus the 2019. So for example, if somebody's business was down by 50% in the second quarter of 2020, which is pretty much, from April through June, like many businesses had, and you measure that versus the second quarter, April through June of 2019, that business would qualify for a second PPP loan. There have been many questions coming in terms of how to determine those gross receipts. There are many accounting questions, and in terms of the documentation that's going to be required, it is not spoken about in the bill itself. So the SBA has 10 days to come up with regulations to give us more guidance. Some of the questions that we're not sure of. Is this based on cash or accrual? How do you determine these gross receipts? One of the things that it does say in the law is that you determine gross receipts by, for a tax exempt organization, by looking at a particular section in the tax code that talks about the Form 990. So it still does not talk about the reimbursable programs. Many organizations want to know if they receive lunch fund money, will that be considered as gross receipts, or can they just look at contributions and other types of income like that? So that's just an open question, and we'll get you the details as soon as we hear from the SBA. In terms of what other things I need to have in order to qualify for PPP2, many people are asking, do I have to have applied for forgiveness for the first round? The answer is I don't have to have applied for forgiveness. I don't have to have received forgiveness. I don't have to apply for forgiveness. I just have to be able to use the funds or say that I will use the funds for the costs that it was meant for PPP1, then I am eligible for a second round of PPP.
That's a really important point, Aaron, because you just told us that we may want to wait to apply for our forgiveness until they come out with a simpler form. And now that kind of takes the pressure off. There's no rush because I can apply for I can apply for PPP2 before I even apply for my forgiveness for my first PPP.
Excellent point. I couldn't agree more. The same affiliation rules probably apply if you're familiar with that. People want to know about the FTE rules, which was a big part of the last bill. The same rules will apply in terms of our duty as a business to use it to pay payroll and to not reduce our headcount, our employees. Specific dates as to when that has to happen has not been listed in the bill. I'm sure the SBA will give guidance in trickles as they have done prior. The loan amount is still 2.5 times your monthly salary. It is based on 2019 data. So therefore, it's pretty much, if you did PPP1, you pretty much have your application, which is based on 2019 payroll. They're going to take your average monthly salary from 2019, and you could use it again. You're going to get 2.5 times your monthly salary for your PPP loan, unless you're in the hospitality industry, and then you'll be able to get 3.5 times your monthly.
What is hospitality? Is that, besides for hotels, is that restaurants? Is it caterers?
Yes. Yes, if you're familiar, you could ask your accountant on what code you actually put on your tax return. There is a code that determines what type of industry you are. So it says if you use code 72, if you see that on your tax return, then you have that availability to get the larger loan. I just want to point out one thing is that, some of these caterers or owners of entertainment halls, there might be other funding that they're eligible for as an entertainment venue. They gave special funding for those businesses because they wanted to keep them afloat. And those would not be eligible because they don't want them getting both funds.
And once you mention that, I'll also throw in that I'm probably check in whichever state you're in. There's often state and local programs, financial programs to help different businesses that are in the restaurant business, in the hospitality industry. So check those out. Contact your, local Agudah office or use Google.
Excellent. Great. Thank you. We've been getting a lot of questions about seasonal businesses or camps that, it says specifically in this law that seasonal businesses are eligible for a second draw for PPP2. So in terms of what payroll data you use to base on, you choose any 12-week period that you want between February 15th, 2019 and February 15th, 2020. So basically, you're going to choose those 12 weeks that you have your majority of your business. So if there's a camp, they will be able to qualify for a PPP loan. You might then have to deal with the issue of being able to spend it within your 24 weeks that you receive the loan. So the same issue that we had before, the loan period, or I shouldn't say the loan period, your covered period to be able to spend the loan starts the minute that you receive, that your business receives the funds, and it goes for 24 weeks after that. So you still need to certify that the PPP loan is necessary to support the ongoing operations. That's been a big issue that has been spoken about. And technically you could apply for the new PPP until the end of March 2021, or until the funds run out. And I don't have my crystal ball to know about when that's going to happen.
Yeah, we'll have to see how that all happens. So you have this a limited period of time where you have to be spending the money on allowable expenses. Tell us about some of the changes in addition to the 25% rule, some of the changes that may make it easier for businesses to spend that money, or if there's any other significant differences between the first PPP and this.
That's a great question. So there are.
Every question's a great question.
There are certain expenses that they added. Some of them, like oddball type of expenses, they included if you had to pay for damage because of the rioting that happened, or if you have extra expenses in order to pay to protect your employees or customers, PPE, or to get a new HVAC system, or to put up plexiglass. Those types of Corona expenses are going to also be eligible forgiveness expenses. And a big one for payroll, a question that everybody had during the last PPP run was that included are also not just healthcare benefits, but vision, dental, and group life insurance for your employees are also considered payroll expenses and are forgivable expenses. So you still have that 24-week period. The difference, something that was clarified in this law, is that you can choose any covered period between 8 weeks and 24 weeks. So it used to be it was either 8 or 24. Now, if I finish my funds after 12 weeks, I could say that's my covered period. And then after that, it doesn't make a difference what my head count drop was. So it's just another advantage that I could choose when I'm going to be able to use that money, which is going to be very relevant when we talk about the employee retention credit in another minute. I just want to mention one thing before we jump into that, which is a big thing for some people. You might be familiar with this EIDL loan, which is a disaster loan. And some people refer to it as the SBA because it's something you got directly from the SBA, where people got, most businesses got $150,000, but there was also many businesses received up to $10,000 as an emergency grant for that EIDL loan. And in the old law, that $10,000 that you received as a grant for EIDL was automatically taken away from your forgiveness on PPP. So basically they gave it to you here and they said, well, we take it away from there. It's not, now it says specifically that EIDL grants are automatically will not reduce your PPP forgiveness. So therefore you have that benefit. And it says in the law, even if you applied for forgiveness, Congress should figure out a way to try to get that money back to you if they took it from you. So good luck with that.
Sounds like a good deal if you can get it. All right, so moving on to the employee retention credit, this is something, as you mentioned, it's not totally new, but it could potentially be overlooked because in the past it may not have been as relevant to many businesses, but it sounds like something's changed. What could you tell us about that, Aaron?
Fantastic. So I'm happy we got to this because many people didn't pay attention to this employee retention credit just because it was specific in the old law that if you received a PPP, whether you use the money or not, or whether you use the money for the same expenses, you're not eligible for the employee retention credit. That has specifically changed. So the employee retention credit now can apply even if you receive the PPP loan. And there are many advantages to it. One of the things is you could even retroactively apply it to 2020. So we could be talking about a lot of money here for your business and organization. And, I'd like to be able to spend some time on this amazing program, this employee retention credit. So the basic idea.
Got 20 minutes to pack in a few thousand pages. So.
Okay. The basic idea of the employee retention credit is exactly as it sounds. Government is saying, we know your business is hurting. Either your business was shut down by government order, or you had a significant reduction in gross receipts, and you still kept your employees on payroll, you still decided to pay them. You're a good business, and we are going to give you a tax credit. This is we're going to differentiate between the 2020 tax credit and the 2021 tax credit because this new law told us things about 2020. The main thing is that you're eligible for it even though you did the PPP. And number two is it said it expanded it to the first 2 quarters of 2021. So I'll talk in broad strokes about it now, and then if we have time to talk about the details at the end, we'll dive in. But here's the basic idea. If the government very much wants businesses to take this tax credit. In this new law, Congress tells the government that they are required to do an outreach campaign to let businesses know that they're now eligible for this credit. So they're saying, please take this money. We want to give it to you because you kept your employees and paid them. There are many businesses that I am familiar with that made a decision to pay their employees even though they were shut down and they weren't doing work. So the government is basically saying that for 2020, we are going to give you a 50% tax credit on up to $10,000 of your employee's wages per employee. So therefore, if an employee was paid $10,000 and you paid them qualified wages, and we'll talk about the definitions of that, you are going to be eligible for a maximum for 2020 of $5,000 per employee, which could add up very quickly. So that's something that is just very important. So it's also important to know that even though you could take the employee retention credit and have the PPP, you still can't double dip. You still have to make sure that you're not taking the same dollar that I paid an employee and say, okay, I get PPP forgiveness and I also get a tax credit on that. So it's important not to double dip. That's just something that you'll have to calculate with your accountants. This credit has some advantages over the PPP. I'll list some of them. This tax credit does not require a necessity certification. So everybody was making a big deal of the fact that, how am I going to prove? Are they going to come after me to say what kind of equity do I have? Did I really need the money? How do I show that I really needed the money? There's no necessity certification for this. If you are eligible and you pay the qualified wages to employees, you're eligible. It also doesn't make a difference how many employees you had. You are eligible for the credit. So Rabbi Cohen was saying that, there are entities that had more than 500 employees. Well, they might be eligible for this credit. It's going to make a difference depending on how many employees you had when we talk about the calculating of the credit. But, the eligibility for the credit is for as many employees as somebody, as a business had. The doesn't need an application. You don't need to do a mad dash to the bank or go through the SBA. This is something that's handled by your good friends at the IRS. So you file a tax return, a payroll tax return, you're going to get that money back on your payroll tax return. So that's just something it's just easier to deal with. It could be that your payroll company will just process it for you. You don't have to go through a bank, and you could even get an advance. You could get money beforehand if, before the quarter, to say, I believe I'm going to be eligible for this tax credit. So there's no forgiveness application. There's no need to apply for forgiveness and say, I used it for this, I used it for that. You're going to just have your 941. You're going to say, you're eligible for the employee tax credit. There is certain documentation that you'll keep to show that you paid these qualified wages, but no forgiveness application necessary. Also, the money doesn't run out. You're not worried that there's a certain amount of money that's going to run out. It's a credit on your payroll taxes. So that's just something that's available for businesses and organizations to do. And, you're probably thinking, okay, how much money can I get? Like, what's the bottom line? Forget about the details. The bottom line is, for 2020, you could get a max of $5,000 per employee. So if my business had 100 employees, you can get a maximum of $500,000 for, as your tax credit, and go back to 2020 and get that money. That's an easy $500,000 to get as a tax credit. It jumps up significantly for 2021, and we'll talk about more of the details. But in terms of hard dollars, in 2021, the tax credit goes up from a max of $5,000 per employee to a max of $14,000 per employee. So it's almost tripled the amount of benefit that an organization could get. And there are other advantages to the 2021 employee retention tax credit that also, might make you eligible, and might even make it that it's more beneficial for you than the PPP. So, as we said before, a business needs to make sure that they're not taking PPP and the employee retention tax credit. And we're going to talk about the FFCRA, the sick leave credits, in a minute. But you need to make sure that those three, you're not double or triple dipping on those same expenses. I'll just tell you myself, my brain is like swimming around with all those calculations and trying to figure out how to make sure that all of those different programs have significant amount of money that your business or organization could get, but they all have different rules and regulations, and there's a lot of overlap and interlocking and moving pieces. So I'm really happy that I'm here at Roth & Company, where we have a team of accountants who are able to understand all those laws and put it all together and make it work and make it right. It would just behoove your business or organization to speak to your accountant or professional advisor, just to make sure that you're getting the best bang for your buck, the best benefit from all these programs.
So Aaron, if I'm a client at Rothco and you guys did a great job in lowering my business's tax liability, does that limit my potential in capitalizing on this employee retention tax credit? Or is this a refundable credit that I can, I'm not limited by how much tax liability my business has?
That is a great question. So I'll give you two answers to that. First of all, it has nothing to do with my business taxes. This is a credit on your payroll taxes that it comes. Any business with employees is going to have payroll taxes. And number two, you are correct. This is a refundable credit, which means if the credit exceeds the money that you pay in, which in most cases it will, you will be eligible to actually get a check from the government. So yeah, good deal. It's a good deal. I just want to mention one caveat before we move on from the employee retention credit, and that is that something that not a lot of people know about, but payments that you give to clergy are not eligible for this tax credit. So they are not considered qualified wages. So if there is a school or an organization, a congregation that is paying parsonage to a teacher, to a minister, to a rabbi, that is not considered qualified wages within the meaning of this statute. So therefore, when I'm making these calculations, I have to, think about, how much payroll do I actually have when I'm excluding all those people's salaries and wages and parsonage. So that's important to know about.
I know that many organizations and businesses were very busy this past week before the deadline to apply for their FFCRA tax credits, which significantly helped for these businesses and organizations. And I've been getting the question from a number of people about if the mandate has been if it's been extended, or if employers still have at least an incentive to provide COVID-related paid emergency family or sick leave. So I know that we're running out of time. We have a lot to get to, but if you could talk about that for a moment.
Sure. A basic 30-second background is that the government mandated in this legislation as part of the original CARES Act that businesses are required to provide a certain amount of sick leave, paid sick leave, emergency, family leave. So the basics are 2 weeks if somebody was sick or under a quarantine order because of COVID, and an extra 10 weeks if they needed to be home with their child who was home from school. So it basically provided a certain amount for the first 2 weeks up to $511 a day, and then 2/3 of their salary for the next 10 weeks for somebody who had to be home with their child. And as you mentioned, a lot of businesses and organizations were able to take advantage and pay that. The government then said, we're obligating you to pay this sick leave. We're going to give you this money back as a tax credit. It also is a tax credit on your payroll taxes. So it's very similar to the employee retention tax credit there. And you'll get a dollar for dollar tax credit. Anything that you paid based on the rules and regulations of that sick leave, a business is going to be eligible for. And in terms of that law only went until the end of 2020. In the new law, it has not been extended in terms of the mandate. So in other words, a company is not obligated to pay the sick leave or a family or the emergency family leave to employees at from the end of 2020. However, until March 31st, the tax credits have been extended. So therefore, if a company voluntarily pays this sick leave and they haven't paid it yet for this employee, you don't get a new credit for 2021 if you already took it in 2020. But if you have not hit the max yet per employee for the weeks that they are eligible for, you can get the credit up until March 31st, 2021. That's pretty much the FFCRA.
Okay, so just before, if we have time, I'm going to try to get into as many details about the employee retention credit. But do you want to take a minute to talk about unemployment, PUA, stimulus check, just like a
Sure. Those are each huge topics in and of themselves, as you know, and many people.
Teach me it all while I'm on one foot.
The rest is commentary. Go study. So there are many people that were helped due to the unemployment, and just in short, the unemployment that we have been extended for additional weeks. It's depending on different states, but the federal unemployment has been extended an extra 11 weeks. And that includes PUA. Also, if you're familiar with that, is the Pandemic Unemployment Assistance, and the additional FPUC, which is, this is just a bunch of, acronyms here, but it basically, everybody knows about the extra $600 that the feds gave on top of regular unemployment. That has been cut down to $300 additional per week from the federal. That's pretty much the basics with the difference, the extension to the unemployment. And, the government also gave the states more money and told them to go investigate more fraud regarding unemployment. But if somebody, was really not so bad, forgive the unemployment. They don't have to pay it back if they weren't. So it gives them the authority to be able to forgive that. In terms of the stimulus check, I think Rabbi Cohen addressed it in the beginning. I would just add that direct deposits started last night. So, don't worry if you haven't received it yet. If you're
I'm checking right now, I don't see it yet.
But... Yeah, so it's important, if you have not filed your 2019 tax return yet, to file it so that you can be eligible for the unemployment. For the stimulus payment. And as Rabbi Cohen said, it has advantages in terms of more money for children than it did previously.
And we only have about 5 minutes left, which does not give us really enough time to go through, we just barely scratched the surface on employee retention credit details. But I do think it's important that we should get in some kind of recap. If you want to stick in any details before you do a recap, go for it. But I was hoping you could just do a quick review of some of the main pointers at the end.
Sure. I think I would just take 2 minutes to just give you the skeleton or the bullet points without all the details, to know what are the important things to know about for the employee retention credit, and then just maybe give some action items as what you can do if you want to be ready for PPP2, because the applications are not out yet, even though many people are receiving emails saying, give us your applications, we're already submitting it. The SBA has not opened up any portals or, allowed any banks or given them regulations to be able to process these loans, but people want to be on top of it because they're afraid of the mad dash and losing the money. So what I want to do in terms of the employee retention credit, the things that are important for you to at least determine, to know before you research about this credit, was both for 2020 and 2021, was your business under a specific government shutdown order? So in other words, during 2020, did the government, whether it was a mayor, a governor, did anybody not just get up and give a press conference and say, I think you should just stay home, be New York tough? No, the government ordered shutdown. Do you have any statement from the governor that said, legislated every business has to close unless they're an essential business. So just know that information, because that's going to make a big difference as to whether you qualify and what you could qualify for. And the other question is, when you paid employees while you were shut down or while you had some drop in gross receipts, regardless of whether you're talking about the employee retention credit or the PPP-2, it's important for you to go through your numbers, whether you do that on your own or you speak to your accountant, to figure out what your revenue was and measure your 2020 per quarter, your revenue in quarter of 2020 versus 2019. It's just important information for you to have. And that way, you know what you'll be eligible for and be able to process the information better. So also know if you did pay employees when you were shut down, were they working remotely? Were they working fully remotely? Or did you pay them for services that they did provide you? Or did you pay them for services that they didn't provide? So that's just something which is going to be a variable for you to have that information. If you are able to have that information, I think that would be tremendously helpful. And in terms of action items, just gather together your information, whether you've applied for forgiveness or not. Just have that information available. Speak to your advisors and professionals, and have that. And I really think that I find it extremely gratifying to be able to assist people and businesses with being able to make it through, survive, and not only survive, but thrive through this pandemic. And may we all thrive and continue that way. And thank you very much for attending and for your attention. Any other final thoughts, Rabbi Soroka?
So I just, my head is like exploding from all this information. And I know, again, because, we discussed before, there's so much more that we didn't even get to. If we can do a quick recap maybe of, what we discussed so far. Sure. I know that we discussed some of the main pointers regarding PPP-1 and PPP-2, some of the changes, for example, the fact that, now you can write it off as an expense when you use that PPP, for payroll. And even when it was forgiven, it's not a taxable income.
Yep.
Some of the other main points that, that you had mentioned, that $150,000 loans that don't exceed $150,000. It's going to be a very simple forgiveness application. And even for the first one, you may want to wait for that.
And 300 employees for the 300 employees or less for the new PPP. And I just want to accentuate something. I'm not sure if I mentioned this when we originally discussed it. Very often people get confused when we talk about employees, because we've heard so much about FTEs. When we talk about those 300 employees, that it has to be less than 300 employees in order to qualify for PPP-2, that's all employees.
Including part-timers.
Even part-timers are included in that. So right. That's not your FTE count. That's something that was very confusing to people in the.
But 1099s, even if they're on the payroll, that, they're not part of the equation, correct?
When you say even if they're on the payroll, 1099s are not on payroll by definition.
I mean, someone who's doing, regular work consistently, but.
Yeah, they don't count.
You have a 1099. Maybe you should.
Yep.
Maybe, yeah. Okay.
Yeah. Somebody who's doing consistent work, maybe have somebody look at it, because maybe they should be on payroll.
Shouldn't be. Okay.
It's a different discussion for a different time.
Right. Okay. Gotcha. So yeah, I think we also discussed, whether or not you applied for forgiveness yet, you're still eligible for round 2. That was another important point. The calculation is basically the same. And, so if you already did it, you already applied before, you should know. And it's also based on 2019. So you should have, those numbers ready to go. We're expecting some more guidance on the rollout, by January 6th. So we got it,
Correct. Yeah. The SBA has 10 days from when it was signed. So, yeah. We'll expect something soon.
Expect something soon over there. 25, for this new round of PPP, we're talking about a 25% reduction for any specific quarter, for any particular quarter.
I just realized something that I forgot to mention, is that the max loan for PPP2 is now 2 million rather than the 10 million in the prior. So might make a difference for many businesses.
And I think one of the most, perhaps one of the most important takeaways that participants have today is that don't think, I'm just going to jump into PPP without first looking at the potential benefits of the employee retention credit, because if you can't take advantage of that, it could be really, really beneficial.
Fantastic.
So, yeah, Aaron, you did an amazing job. Not that I expected anything less from you and your crew. I want to thank you for your time and for your lending your expertise. I know that you put a lot of effort into gathering all this information, and again, there's a lot more. Hopefully, we'll have a follow-up. I know I think I saw over 200 questions that came in. We will try to get to all of your questions. We will try to get to all of them. We'll try to do a follow-up and create an FAQ or a Q&A that we distribute afterwards. And thanks again for being here and participating. We really appreciate it.
Thank you, Rabbi Soroka. I am grateful for your partnership. Thank you. All the best, everybody.